The Fed is set to make a decision tomorrow. FOMC is upon us yet again at 2 p.m. Eastern Standard Time. And on this video, what I want to do is get you prepared for my beginners, long-term investors, experienced traders, intermediate traders, wherever you fall along that spectrum. Hopefully this video can serve you in the best capacity. My name is Dr. B. If you don't know who I am, you can read more about me down below on my website, brianmckelderry.com. I've been a full-time entrepreneur for the past 8 years. I've been trading in the financial markets for the last 6, going on 7, primarily on the option side, but do trade in the futures market as well. I'm very good, in my opinion, on the technicals, but I think the fundamentals, meaning the news and what Trump is saying, and also what U.S. Secretary Bessent is saying, along with Fed Powell pushing back on making a decision to cut rates. There's a lot going on, and we need to be head on swivel, as I like to say, to make sure we're making the right decisions. All right, so let's jump into today's video. I'll have some opportunities down below for you to jump inside of our Discord, in our community. If you want to learn more, if you want to stay on this platform and do your due diligence, you're more than welcome. But if you are struggling just a little bit, tap in our Discord. We'd love to have you inside of a community. If you're in multiple communities, I think the more the merrier. Make sure to do your own due diligence. Make sure you're making the right decisions. Keep your risk management intact, and you can go from there. All right. There's educational videos on the platform here on our channel, and you're more than welcome to check those out if you are still learning. All right. Without further ado, let's jump into what we have on the docket. So Secretary Bessent, as you can see here, is our U.S. Secretary, and he used to be a fund manager. And we have here that he is set, you can see right there, on May 8th, Secretary of the Treasury, Scott Bessent, will travel to Switzerland to try to make a deal with China. Okay, we know, or if you don't know, we've essentially been trying to make trade deals on these tariffs. These tariffs have been looming, even though President Trump has said there's been a pause, right? You'll see on the charts coming up when we jump on the charts that we've been a slow, steady grind back up, right, from that dip buy that we have on his tariff news from the beginning of April. And we've had a steady rise, and we've essentially recovered all the losses from that first tariff announcement at the beginning of April. So right now, what we're waiting on is we're waiting for that trade deal to be done, because if some type of trade deal can be done and the markets like it, then we're going to spur back to new highs and potentially back to all-time highs. Okay, so that is why the market's kind of settling here, trying to decide one way or the other. Another caveat is we have Fed Powell, okay, who is in the way. All right. And a couple of things that I want to discuss on Fed Powell right here is that he is the decision maker. Okay. There's been this fight back and forth between Fed Powell and President Trump. President Trump talking about that Fed Powell and Trump, if you see here, he wants him to cut rates tomorrow. All right. But from the past meeting, Fed Powell essentially said, hey, we don't have enough data to go off to cut rates. Now, in my particular opinion, I agree with him, right? There's been some positive jobs that have been implemented into the market from our jobs report last Friday. We've had some decent reports coming in, but we know the consumer, right? You and I are still getting hit with we've got student loans for some people. We've got inflation still on the shelves. We got scarcity still in the market of what people are doing for their household. We've got credit card debt, student loan debt, debt in general, right? We've got now tariffs that are going to be affecting the car market when people need transportation to and from jobs, right? So the dollar is also losing its value. So don't mean to press any scarcity on anybody, but do you see where my sentiment is personally? And the market really doesn't care what my sentiment or your sentiment is essentially trying to gauge what the reaction is going to be. So for my long-term investors, here's your game plan for this week. If we drop, great. You have another opportunity to buy the dip. If you're already in and you bought the dip and you're in from 5 years, 10 years, and you've got your retirement fund that you're just a little bit concerned about, if we pop and they make a deal and Fed Powell comes out with some bullish, some dovish news, right? He's bullish on the market that we could see some rate cuts, then the market spurs. A win-win scenario, right? So a long-term investor, you're not really concerned necessarily what's going to happen here, because either way, it's a win-win. Buy the dip even more if it comes lower. Right? Hopefully you've maybe, managed your portfolio to where if you're up significantly from this previous dip, maybe you want to trim some. That's up to you, not financial advice. But if it drops lower, buy the dip more, right? Not a hard concept, right? For my traders out there, people that are trading this week, you want to be mindful that it could spur either direction. Okay. And there's going to be some volatility. Okay. So that means on Wednesday, right? Tomorrow at 2 p.m. Eastern Standard Time, typically what happens is you typically have some type of, sideways action, and we'll talk about some earnings that just reported, some sideways action, right? You'll typically have some channel and range bounds that go into him talking, okay? About an hour into him talking, right, we'll have volatility. So at 2 p.m. Eastern, there'll be volatility back and forth, okay? If you're comfortable trading that volatility and you're good on the charts and you can scout back and forth, getting in and out of trades very quickly, great. It's a great opportunity for you. But typically the gold standard, because I'm speaking on a public platform, what you want to do is you typically want to wait until after he stops talking, which typically leaves about 30 to 45 minutes, potentially an hour until the market closes. So he speaks for 30, 45 minutes to an hour. Sometimes he goes a little bit longer. Once he stops speaking, okay, then the market will open back up and choose a direction. All right. And you can trade in that direction a little bit more clearly. All right. So we want to see what his sentiment is. Typically, when he steps on stage, volatility starts back and forth. It goes back and forth until he decides to get off a stage, and then the market consumes what he's saying. Okay. So what I like to do, if you want to know what I personally do, it depends on the day, right? If I see a trading opportunity going into him, I will take a couple of trades or maybe one trade before, leading up to him. If I see a trade opportunity, if I don't, I'll wait all day. If I see something after he speaks, I may take something. Sometimes I've taken all of FOMC off and then traded the Thursday and Friday after he gets done speaking, because then the market settles in. All right, we good? So you got my long-term investors, just watch and see what happens. We've got my short-term traders or traders in and out of the market that generate income. There's your strategy if you don't have a strategy, or what this may look like. Okay. So just watch that 2 p.m. Ideally, if you're in a trade, you want to lock it in unless you know exactly what you're doing and which way it's going, because I've seen people, including myself, everyone's done it in my opinion, right? You're still in a trade leading up to him speaking. You think it's going one way and it spurs in the other, and you have to stop out, right? So I've had also trades where I've taken it into him, right? Define my risk, and it goes in my direction and immediate profit. Okay. So just want to shout that out there about a strategy of how that typically goes. All right. So let's get back to a couple of notable things here that I just want to mention for you to keep on watch. The Fed just bought up 20 million worth of 3-year bonds. Does this mean that quantitative easing and money printing has started? Now, I was reading into this particular Proxima trades. I do your due diligence, right? But I was reading into this and doing my own as well about saying, is this quantitative easing? And if you don't know what quantitative easing is, that is what happened when the Fed started printing money and buying these bonds, these securities, right, during COVID, right? Which was not necessarily a good response to what we actually needed. We need cuts, we need jobs created, we need money put back into the consumers' pockets, right? We need those types of things. But sometimes the Fed injects money and prints money into the markets to heighten it up so it doesn't scare everybody off. It kind of softens, right? Quantitative easing softens the blow of what's upon us. Okay. So just keep that in the back of your mind that I'm looking at this. I'm like, is this similar? Are they showing something that we don't know? Right? No one knows unless you got some insider news and whatnot, but no one really knows. All you can do is your due diligence and react to the markets. Okay. So what I use it for is I typically use it for my thesis, right? I gain a sentiment around the overall markets. If I'm seeing certain things starting to happen, I'm like, maybe the charts are presenting something that we're not seeing. Right? Maybe this is a nice uptrend that we're having right now. If I go into ES futures, maybe this is a nice little uptrend here. Great. But what if it is kind of softening the blow for something to come? Right? That's a possibility. So that's what I'm saying essentially is how you wrap your head around the fundamentals, right? The news, the data that I'm presenting here. And then you look at the charts. And kind of just personally, I am more of a technical person. So I react to my levels, and the news will react to those levels as well, typically. Okay. Positive news, great. They make a deal. Cool. We're going back and probably testing, close to all-time highs. If the news isn't good, if they're just softening something, softening the blow, we go a little bit higher. Great. This is a big bull trap right here, and we come all the way back down. So I'll touch on that towards the end once we get on the charts. Okay. A couple more fundamental things I want to show you here as far as the data. Okay. So what do we had today? We had AMD earnings, which this is our Discord here. So I'm going to pull up AMD earnings. Okay. And our AMD earnings and SMCI earnings reported. Okay. Rivian as well, Upstart. So I would say on this chart right here would be SMCI, AMD, and Upstart would be the main ones there in the morning. Got some pretty heavy hitters, you know, relatively, so to speak. Uber, Disney, Novo on the top three there. All right. So AMD had a pop. It had a double beat, but they had a little bit of softening on their guidance. Just like if you've been watching my videos, it's your first video, welcome. But if you've been watching my videos recently, I've been talking about why are all these companies like Palantir, why are these companies like, Amazon, Apple, right? Why are they popping on good earnings beats, right? That's what they're supposed to do. And then they're dropping after hours and they keep dropping, right? It's because the guidance is typically soft because of tariffs. How can I predict what my company is going to do if I don't know necessarily the outcome of how I'm going to handle if something gets worse? If we do have higher percentage tariffs, if it is going to cost our company more to import and export chips, right? To get the products that we need at a decent cost basis. So of course, that's what I'm seeing here now. If you're seeing the same thing, great. But that is the reasoning you're seeing. For example, AMD, if I go to it, right? And I go to after hours, do you see that it popped up to 106 after hours and then kind of sold back off $6 and it's right back underneath the previous day highs, right? Which is technically a failure, right? Now, can we reclaim and get back above 103, maybe with some positive news and Powell tomorrow? Yeah, of course. But if you see that after hours, typically it's a softening, right, of the blow that maybe their earnings had a great, but the earnings call was a little bit lackluster. The shareholders are just not confident about what they're seeing potentially, right, with the forward guidance of their particular company that they're holding. So if I see this tomorrow, right, and we remain underneath that previous day high in this dark black area is today's action, sideways into earnings, right? But we popped into that 102, 109, 101.99, okay? If I see that pop and it still, struggles around there, then we could just slowly fade into Powell, okay? And we retest some of these lows and it's going to remain underneath 102. But if I see a break above and it holds, then we can retest that 106, 107, and we go back and try to get upwards into that 110 area, okay? So watch out for AMD tomorrow. It should be a decent trading opportunity as there's going to be some volume on it post earnings. All right. So that is one type of how I trade pre FOMC is I look for something that may have had earnings or has a decent amount of volume. So I know the semiconductor is going to have a lot of eyes on it because of AMD and SMCI. Okay. So I'll take a look at NVIDIA in just a second. All right. So that is the earnings calendar. So now we've got our sentiment. Okay. Just gave you the game plan on how FOMC goes, gave you an idea about when it reports at 2 p.m., he'll step on stage and they'll give the sentiment of whether they're cutting or pausing or whatever. I personally think it'll be a pause again. And then he'll step on stage and start speaking about why they made that decision. All right. So all between 2 and roughly 3 o'clock Eastern Standard Time, just mitigate your risk. Come back after he stops speaking, maybe watch the market, see how it reacts, get your trades in roughly about an hour to maximum hour and a half into the start of the market. So 9:30 Eastern Standard Time, go ahead and get your trades out of the way, right? Get you some cushion, some profit, right? And get about. That's my recommendation personally. Okay. All right, let's jump on the charts, my favorite place, and let's look at why this big pop just happened. Okay. So this big pop after hours, you see we're fading with lower highs right here. Okay. Again, I'm on SPY. Let's get a bigger outlook on SPY on a daily, and I'll rechart it for you here live. Okay. Now turn on a couple of moving averages here, and let's go on a daily time frame. All right. So we've been talking about this. If you still have not checked out our Stock Sermon Sundays, turn your notifications on for 7 p.m. Eastern Standard Time on Sundays. Every Sunday, I go over the entirety of the market for the week and what to expect. And everything is kind of panning out like we expected. We talk about some profit taking coming into the week, right? And there was some gap downs, and then just forming a little lower, trend here. All right. Now, if I go into the daily, do you see that this 200-day moving average is sitting right at 570? That is our line in the sand with Powell. Okay. That is our line in the sand with Powell right now. That just means that this can serve as a resistance and form that lower high on a daily time frame. Right now, we're technically forming a lower high from our previous lower high at the end of March. Now, this is another lower high, okay? So if we remain underneath this 570, right, then technically we can start fading off, right? If we pop into there and just start kind of fading and still forming lower highs, then there could be that May sell-off, right? That May profit taking that may come in potentially. All right. So you want to be prepared for quote unquote the worst case scenario. Now, Brian can't always be scaring folks off. What's the best case scenario? He gives some type of great sentiment. There's a trade deal. And if you see SPY above 570, like it pops up into 573, 574, and we get a break, retest, and sit above here, then yeah, we can spur back to all-time highs like that. That is what it would technically look like. It was a big green candle that would spur up higher. Okay. So for my non-experienced people or non-believers or whatnot, we're not guessing as quote unquote traders. Okay. There's some long-term investors out there that just don't trade and they don't look at these lower time frames. They're constantly looking at the weekly or the monthly, which we do as well. But if I'm looking at what's going to happen tomorrow or by the end of this week, I'm watching very key levels to see what actually reacts and happens there. Okay. So news comes out, right? So I wait for news to come out and I'm trying to see what we do with that news. If the news comes out and it pops, okay, great. The news must have had a positive reaction. I want to wait for that first retest and then I may watch for where it settles in. If we hold above 570, it starts to build above 570, then we can go higher. Okay. If the news somehow pops lower, okay, we pop back up into this 564, 565. Okay. It pops, then drops, then we pop again into 561 or so. Then yeah, we can start falling. Now, do I think it's going to tank that far? No. I told my community today that I think personally, right, my first like big support that I'll be watching for SPY to get back to will be 550. That's the first like deep support that I'll be watching for SPY to try to retest if we do drop. Okay. So I'm not looking for that big fall into that gap until we break underneath 550. Okay. I want you to see it here. So now I'm in the 4-hour time frame. Support, resistance. See how it broke underneath that and started struggling to get back above. Then it can go lower. Support, 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 support. So if this does turn into a resistance again for some reason, and you start seeing a fall, right? I could definitely see 550 coming into play if we do fall into that free fall this week at some point. Okay. So do you see that $20 range? It's in this range right here. That is how wide your range can be with FOMC. So for my traders out there, or for anyone that's a beginner or trying to trade, if you don't know what you're doing, right? Sometimes I step away, right? It doesn't matter if you are 4 or 5 years in, a year in, 6 months in, whatever, right? You can do the same thing. You don't have to be experienced to say, I need to step in front of this, right? I want to trade off of the higher ends of the ranges, close to 570. So 568, right? 566, 570. I want to trade off the higher end of the ranges and react there. Either I'm breaking above and go higher, or I reject it with puts, right? Or sells for my futures family. And I want to trade off that higher end of the range. Ideally, if we free fall or break below that 555, that's going to be my pivot level. Okay. Which would be that 555. Then I want to ideally, for the best risk to reward, trade off of this level for calls back up or buys back up. Okay. So that is a very wide range. You see how much it can, go in between these ranges one way or the other. Okay. Now, if that trade deal is true and we do fall tomorrow with Powell's sentiment into that 550 and we hold, that trade deal could be that catapult, right? Off of 550, right? That trade deal could be that catapult that we take off to 550 and maybe go back into those higher ends of the ranges, 580 or so. Okay. So I am not going to be surprised if this turns into some type of pullback, hold into 550, and then take off. All right. So I'll be watching, lower levels, like more minor levels or micro levels, as we call them, intraday. So if I go down to my 30-minute time frame on SPY, you see this 555 to 557. You see that this is holding right now, but also what I'm watching for my structured folks is this somewhat of a head and shoulders. Okay. Is that somewhat of a head and shoulders if Powell kind of pulls us back drastically tomorrow? We don't know yet. So I'll just be watching the levels to see how we react. Right now, we are forming still lower highs right there. Okay. So higher end of the range will be the safest to trade off of. But for my folks that want micro levels, watch that 564. Okay. That 564 couldn't get back above it today. And then we're kind of rejecting a little bit there at 564, right? After hours on that pop. So I'll be kind of watching this 564 to 565 area just to see how it reacts. But with that strong push, don't know how the market's going to react tomorrow. Okay. All right. QQQ game plan 487. Okay. If we're below 487, okay, that is technically a resistance zone. 487. You see how we broke, held above that 487, that red line, and went higher. And then right now, do you see it stopped right at that 487 after hours? So watch 487. Okay. I'm be watching it tomorrow to see how we react. If we're above 487, then we can spur back to about that 490, and then 493 will be in watch. Okay. It'll look something like this, break above and push and squeeze into that 493 into a new high. Okay. So that's what I'll be watching tomorrow on the Qs. All right. Again, you can see here on the daily, we're sitting right at that daily 200, which is going to be very, very key. You see that that daily 200 is sitting at right at 489, and we are sitting right below it and rejecting it. Lower high, and another lower high. So that is a downtrend right now. So if we pop up again and kind of fail, and I see some top wicks coming in at 487, we fail back underneath 487, then I'll be looking for probably some short dated puts to see if we can, get that lower into the range. Okay. Lower into the range will be filling this full gap all the way back down to, so let me show you what it would look like for those that don't understand terminology. That's how it kind of looks after hours right now. Okay. So if I see top wicks come in tomorrow before he speaks or during he speaks, that's how it could potentially look right there. All right. Pull back into that 475, fill those full gaps. Very similar to that 550 on SPY. All right. So keep your trend line here. Watch that trend line. You want to see it break ideally back above 487 and clear it, and then you can take it up. Right. Or if you're a call person or only an upside person, you don't know how to trade the downside, then wait for a deeper pullback, in my opinion. You want a true breakout above that 490. I would even say 491 to be safe. Or you want to pull back into that lower end of the range, ideally back down into 475, 476. I like to keep wider ranges on FOMC day because it's so volatile that it could definitely have, $6, $7, $8, $10 swings in one day. Okay. On the ETF. I'm not even talking about futures, which could have, 100-point swings, potentially 200-point swings. Okay. All right. IWM, let's jump into it here. IWM, I have a different outlook on. Okay. I have a different outlook on IWM and, still looking like higher lows. I mean, I have to keep this in mind that the market still potentially wants to spur up. Okay. So IWM still holding this 197 area, right? Which is RTY, which are the futures 2000. Okay. Right there at 2000, roughly on RTY. Okay. So lows, lows, lows. I go into IWM, same thing, lows, and it could try to break above 201 again. So if IWM starts to build and hold this 198, hold 200, starts to build, you could see IWM take off this week potentially into those new highs and spur up into 205, 206 area. Okay. And that's how it would ideally look. So be careful shorting IWM. Be careful shorting the market in general right now until we get a direction, right? All right. So I'll summarize on pivot points. As long as SPY is above this 555 and 557, right, it's going to try to go higher. Until we get a break underneath 555, then we can target 550, 548. So watch that 555 to 557. As long as we're up here, it's going to try to go higher. Okay. QQQ, as long as we're above 483, okay, 483 on QQQ is going to try to go higher. Okay. I know it looks a little bit overextended and you want to top tick it, which I love top ticking puts as well. Personally, if you know, you know, but it's going to try to go higher as long as it's above that 483. So you want to be patient, right? If you are more on trading the downside sometimes, okay? QQQ, I would wait for that break underneath, 480, maybe 483. You can get some starters, but underneath 480, previous day lows, it could get, aggressive down into those 474, 473 level, okay? Which would be right here. All right. So there's your pivot point, 480. If it breaks underneath 480, then you can turn that into a rejection and then trade it down for the safest trade. Okay. If we do see a little resistance, I may try to look at some puts up here, but with the strength of the market and Powell could send it higher, don't really want to get too eager up here right now. All right. All right. I'm going to wrap this up with a couple of ideas. Main watch tomorrow is going to be before Powell speaks, AMD. I'm going to see if, there's some opportunities to maybe get a rejection trade on there. If it remains underneath 102 and maybe rejects back underneath 100, could get that fall back into the 95 range. NVIDIA, very, very strong in this channel. It needs to break one way or the other. I've stopped trading NVIDIA personally because it's in this channel, right? Break consolidation into that channel. It's either breaking above 116 or we got to get it breaking, and fading back underneath this 112. Okay. Above 116 or below 112, I'm leaving the video alone right now until it breaks one of the channels and we can trade it a little bit better. Couple of overextensions, right? I want to really watch Microsoft up here into this 440, starting to get a little bit heavy up here. Okay. So keep your eye on Microsoft, right? Big earnings push, consolidation, push up into here. I really wanted it to push up closer into that 450 range, but it's getting a little heavy at this 440. Rejection underneath 440, rejection, rejection. And if we do get a little bit of weakness in the market, right, and Microsoft starts to get a little aggressive, watch for Microsoft to pull back to 420 to 425. Okay, 420 to 425. I'll show you what the gap fill looks like. It will look something like this. Okay, maybe it gets partial of the gap. I don't think it's going to get that aggressive and fall that fast, but we could get roughly a 10-point drop, maybe 15 on Microsoft if the market gets weak. So watch SPY, watch QQQ, and also watch Microsoft on this lower high that is technically formed right here. Push up, rejection, then form that lower high right there. one more rejection, fall back underneath, and could get that continuation to the downside. Okay, for puts. Palantir, I need to do a whole separate video on that, but Palantir, just weak guidance. That's all it is. It was overvalued, need to pull back, and earnings pulled it back. They took the profits, trapped anybody that put calls at the top, and we'll watch Palantir where it recovers back to. It does have some more gap to fill to the bottom, so we'll see where it recovers. Palantir could be a decent opportunity if it breaks back and reclaims 112. Palantir breaks back above 112 like this, holds 112. Then we can take it back up into that 120 area if the market gets strong. All right, so watch Palantir at 112. You see that big break today underneath that. That could turn into a resistance. So be careful on Palantir potentially falling more. If it trends up into here, struggles at 112, you could get another continuation back down into that 100. So watch 112 on Palantir, which would serve as resistance right now. All right. So that's my game plan for tomorrow. Congratulations to anybody that picked up HIMS inside of our community or anybody around the investing streets. Great, nice little trend line right there into their earnings. Beautiful hold of $25, $26. All right, great breakout right here. If you see that, consolidated, broke out, retested, right, and then just spurred higher. Now it's trending upwards. So we could get like one more pullback on it before spurring back into the 60s. If it takes off tomorrow again, great. You're winning on long-term shares. It is going to try to get back into that 59, 60 range, right? But great opportunity, has doubled from $25. So what do you expect? There might be some profit taking before it spurs to the next high. So watch Palantir pull back, potentially back into 43 to 45. If it does decide to pull back into that 43 to 45, and then take off again. All right. Alrighty. That's it. That's all I got. Thank y'all so much. As always, make sure to check out Leverage University. You can go on my website here, brianmceldery.com. All right. You can see there how to work with us. There you go. Click on Leverage University. All right. Discount code should pop up as well. All right. So I think the video is spurring us, giving us some trouble, but just want to show that. If you want to jump into our stock market boot camps, which we are doing right now at the time of this recording, right? We have them once a month. If you want some private mentorship, maybe a consult or something like that, you're more than welcome to DM Dr. McElderry on Instagram. If you want more coaching, consulting, things of that nature, you want on the life coaching side, personal development, business, entrepreneurship, trading included, right? We have our Kairos syndicate level, which is our mentorship that typically takes 4 to 6 months that we're working one-on-one together. All right. Thank y'all so much. Congratulations to everybody that participated inside of Leverage University and anyone that's learning here on this platform. I'll talk to y'all soon. Peace, love, and blessings. Be safe tomorrow and trade safe. Bye-bye.